Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Did you guys know that February is, on average, the second worst month, trailing only September for the lowest monthly average return over the last 100 years for the S&P 500? When it comes to the tech-heavy NASDAQ composite, February actually tops the list of worst months in the years dating back to 2000. Now remember, things like artificial intelligence and President Trump can certainly buck that trend, as it did last year. But if it turns out to be true, this could be my chance to buy the things in my portfolio I like at a lower price. Now let's talk about AMC and the definition of dump months. In the movie business, there are two periods of the year often described as January and February and mid-August through September, when new movie releases are either poor quality, cheaply made, or intended for niche audiences, since low movie attendance limits the potential box office return. Having said that, when I checked over at MoviePhone, there seems to be some movies coming out with some box office potential. Some of the Harry Potter films will be re-released on February 13th. Then Captain America drops on February 14th. And my personal must-see, The Monkey, comes out on February 21st. Okay, so maybe February isn't looking so hot. On the left, we can see as of Friday's close at $3.12, AMC stock price is down 22.44% over the past year. The other thing that's interesting about February is, according to Earnings Hub and others, we could see earnings in 25 days or on February 26th. AMC has beat estimates 14 times in the past 17 quarters. It's never helped the stock price, thanks to Chief Dilution Officer Aron. But let's take a look at estimates anyway. Now, in Q1 of last year, we had a revenue beat of 9.23%, EPS beat 1.27%, but in Q2, a revenue miss of 0.10%. In Q3, we were expecting revenue of $1.33 billion, but came in at 1.35, a gain of 1.43%. Earnings per share, the street was expecting an 11-cent loss. We lost only 4 cents, which is 63.64% better. According to AI, there were some positive results in Q3 also. Number one, box office recovery. The domestic box office reached a post-pandemic high of $2.7 billion in Q3, a 37% increase from Q2 2024, indicating a strong recovery in moviegoing. Number two, financial performance. AMC reported a 37% reduction in net loss compared to Q2 of the year, with revenues up 31%. Adjusted EBITDA was 4 times stronger than Q2 2024 and aligned with pre-pandemic levels despite lower attendance. Having said that, AMC is still not popular with analysts. Over the past 6 months, we have only 5 rating opinions, 0 buy recommendations, 60% hold, and 40% sell. Price targets range from a $4 low, a $6 average, to a $10 high. AMC's closest competitor, Cinemark, has had a far different year, reaching a high of $36.28 in early December, and as of Friday's close is up 105.53% over the past 12 months. For the life of me, I can't figure out what the big difference is between the two companies. Interesting factoid, CNK has never split its stock in its 40-year history. According to NASDAQ, AMC is set to report on February 26. That could change. The upcoming earnings date is derived from an algorithm based on the company's historical reporting dates. Their vendor, Zacks Investment Research, could revise this date in the near future once the company announces the actual earnings date. According to Zacks, based on 4 analysts' forecasts, the consensus earnings per share forecast for the quarter is negative 19 cents. The reported EPS for the same quarter last year was a negative 54 cents. Now there's the daily chart for AMC on your screen. The 52-week low is 238, but I believe the closer we get to 3, retail will come in around the whole number to defend the stock price. Whether they succeed in defending 3 is obviously unknown. Since that recent high of 556 on December 5th, the stock has been in a free fall. I count 25 red daily candles versus only 12 green candles. So Frank, are you saying you're a buyer here? No. I would like to buy this stock under 3 though, and I want someone to pay me to do it. Come again, Uncle Frank? You heard right. I want someone to pay me to buy the stock at a lower price than it's at right now. So I sold or wrote the $3 puts expiring next Friday for 8 cents per contract. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any stock or cryptocurrency. So what can happen here is if the stock price rises and the contracts expire worthless, I keep the premium. If the stock goes sideways and the options expire worthless, I keep the premium. If the stock goes under 3 by next Friday, I will have to buy 100 shares per contract sold at 3, and I keep the premium. So as I said, they would be paying me to buy the stock at a lower price than it's trading right now. So essentially, Uncle Frank is trying to buy the stock low and sell into a potential rise into earnings or a recovery from oversold conditions. RSI, or Relative Strength Index, measures the speed and magnitude of recent price changes, comparing average gains to average losses over a set period, usually 14 days. An RSI above 70 is generally considered overbought, while an RSI below 30 indicates oversold conditions. AMC is currently solidly under 30 at 27.80, so because I wrote the puts or the right to short the stock at 3, I'm obviously hunting for a bottom to buy the stock when it's oversold and looking for a recovery rally to sell into. We all know tech indicators don't always work as expected, but I think you can see what I'm trying to do here. Now for a fundamental look, let's go to this hit piece by Simply Wall Street titled, "Is AMC Entertainment worth $3.10 based on its intrinsic value?" Notice the author hides behind an editorial team instead of disclosing his name. Notice it came out at 4:21 in the morning on Friday, options expiration day. AMC Entertainment's estimated fair value is $2.36 based on 2-stage free cash flow to equity. Current share price of $3.14 suggests AMC is potentially 33% overvalued. Analyst's price target for AMC is $4.18, which is 77% above our fair value estimate. You could never accuse Uncle Frank of not being fair and balanced, right? The most recent headline I have for you guys is from The Hollywood Reporter. AMC Theaters ups Nicole Denson Randolph to U.S. Chief Content Officer as Elizabeth Frank exits for Real D. As part of the transition, Juan Antonio Gomez will now lead all content programming internationally for AMC, the largest theater circuit both in the U.S. and the world. AMC has promoted Nicole Denson Randolph, on your left, a key player in bringing Taylor Swift's blockbuster Eras tour to cinemas, to Chief Vice President and Chief Content Officer in the U.S. Just to keep it real around here, Taylor Swift's dad made that deal. She'll report directly to AMC Chairman, CEO Aron, as she works with Hollywood studios and indie distributors to book movies and continues to seek out alternative content. Now, let me tell you about Elizabeth Frank on your right, who's leaving us for Real D. Ms. Elizabeth Frank has served as Executive Vice President, Worldwide Programming, and Chief Content Officer for AMC since July 2012. Between August 2010 and July 2012, Ms. Frank served as Senior Vice President, Strategy and Strategic Partnerships. So about 15 years altogether, guys. Over those 15 years, Ms. Frank never purchased a single share of AMC stock, not even a little for a favorite niece or someone like that, but she did manage to sell $9,181,000 worth on the open market. And do you see when she sold? From March of 2021 to March of 2022. A smart cookie, right? Can you blame her? If you were in that boardroom and heard the shit Aron, Citi, and Morgan Stanley were planning to do to the company's stock, you'd have sold too, am I right? Liz has another 138,000 shares left, so I'm sure she'll be banging out of those any day now if she hasn't already. Thanks for the memories, Liz. You guys should all know our AMC executives are in the top 2 highest compensated executives by their titles in the entire media industry. They pay themselves like we never had any debt, like there never was a pandemic, like our theaters were never shut down, like we were never starved for movies and content for our theaters, like there never was a writers or actors strike. When Aron says he feels your pain, that's as funny to me as today we pounce. You remember his pay plan doubled the year of the pandemic. None of the executives on your screen, or the entire board for that matter, ever purchased a single share of AMC stock over the past 6 years, but they sold over $1 billion worth to you on the open market. When Mark Cohodes told you these people ran an enrichment scheme at your expense, he told the truth. So, Uncle Frank, do you have any hopium for us? Well, actually, I do. Since I believe Adam is nearly done diluting the company and its stock into the ground, while extracting every penny he can for himself, his executive team, and even this shitty board of directors, which is led by a Morgan Stanley executive, we may be getting closer to his ultimate goal of bleeding us dry and selling us off cheap. He's spending every penny he can on CapEx to keep our chance of posting profits to a minimum, thus keeping an unwanted advance in the stock price off the table. You may have noticed we recently added 2 new smiling faces to our board, both CFOs. One from Cars.com, Sonia Jane, and one from Bally's, Mr. Glover. Now, why add CFOs when we already have the dirtiest, shittiest CFO in stock market history? A guy that joined the company 60 short months ago, but has sold over $17,750,000 worth of AMC stock. That's right, Sean Goodman, the guy that must have approved our investment in Hycroft Mining, a previously bankrupt gold mine, down 98% over the same 5 years, even though gold is over $2,800 per ounce on the COMEX as we speak. This same guy, they made the second highest paid board member at Hycroft Mining, bringing him another $168,000 to do absolutely nothing. Was that quid pro quo, Sean? We'll never know. Do you know what Hycroft did with that money we invested in them? According to the disclosure, it went to pay down debt to Mudrick and 4 other lenders, all short sellers of AMC at one time or another. Mudrick himself was investigated by the SEC for his trading in AMC, but it was Gensler's SEC, So nothing ever came of it. So where is the hopium, Uncle Frank? Well, in Sonia's past, she helped Apollo acquire the company that was parent to Redbox when it took the pipe. That's from her bio, not my opinion. So maybe she can help Apollo again in an acquisition of AMC. Not investment advice or advisor. Now, the other guy, he's from Bally's, which I consider a good candidate for a merger with AMC in the entertainment space. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.